Hi, welcome everybody to another edition of the Joel and Jameson Show. My name is Jameson Melby. I'm a real estate agent with RE/MAX Results.
And I'm Joel Gray, and I'm a mortgage loan officer with Citizens One. We're here today to do another edition of our show, kind of cover some topics that we received here via questions from consumers and buyers out there. How things going for you right now, Jameson?
Good. Spring is picking up. We're getting busy.
Yes.
How about you?
It is. I was just on a conference call here the other day, talking about just the rates and the fluctuation that they're starting to have here.
Right.
Starting to trend upwards, and we'll probably continue to see that here. So now is definitely the time to get out there and start doing things.
Yeah, get those rates locked before they climb, right?
Yes, absolutely. You don't want to wait on that. So we're going to start off today with some buyer questions that we received. So I'll start off with you here. First question that we have coming in here, Jameson, is what's the difference between an appraisal and a home inspection, and what are they required?
Okay, so here's the deal. It's a very common question that I get all the time. What is required, what isn't? So to give the quick answer, an appraisal is mandatory.
Yes.
If you're borrowing money, that has to happen in every transaction. Home inspections are optional. We heavily recommend that you get those done. Now, what they are, the appraiser is going there to come up with a value of the house in a general condition for the bank's purposes. Now, they just want to make sure that the money the bank is lending, the house is worth what they're lending. So the home inspection, you hire an inspector who is digging into the house. He's looking at, are the outlets grounded? Do we have safe electrical, good plumbing? Are there any leaks? He's looking at the HVAC, the grade of the house. I mean, the shingles, everything.
He's getting a little bit more nitpicky.
Definitely. So he's the guy that's going to tell you this is a safe house, it's a healthy house, and then things he finds, then we can go back and negotiate.
Correct.
With the seller on either repairs to get those fixed, or knocking money off the sale price, or if it's in good general condition. There aren't major fixes, just taking the house the way it is.
Correct.
But it costs about $350, and it can save you tens of thousands of dollars.
Yes, absolutely.
If you find something. So again, appraisals are mandatory. Home inspections aren't, but we definitely recommend them.
And you were talking about repair items, like on the home inspection. A lot of those, that's whether or not the buyer wants to negotiate those in. Where if there's repair items that come back on an appraisal, those are required.
Those are mandatory.
Yeah. So big difference there. Keep that in mind.
Yeah, definitely.
But a lot of times they go hand in hand, right? If it's called for in the appraisal, typically that home inspector is probably ours.
He's going to catch that.
Yeah. He's definitely noticed it.
Yeah. So we have a buyer here for Joel, or a question here for Joel. What are some upfront items I can have prepared for lenders to get the process started faster?
Yeah, this is a great question. As lenders, once we've done a pre-approval for a customer, we don't require any upfront documents. We're not allowed to require. We can let people know what to expect, and if they send those over, that's we can do that. Then we can begin to kind of look them over. But some of those items you're looking at are 2 months bank statements. You want to keep in mind these are bank statements that you're going to be utilizing for the transaction itself. If you have kids accounts and those are not going to be a part of the transaction, you don't need to submit those, right? Want to keep in mind on large deposits. So anything that's over 50% of your monthly income, those are be considered large deposits other than payroll. You got W-2s, 2 years of W-2s that you're looking to get, 1 full month of pay stubs. If you're self-employed, you're typically looking at tax returns, maybe business returns, some of those things. Potential letter of explanations, whether you've had recent inquiries, so you're shopping with other lenders, or you bought a new car, or whatever it may be.
Right.
And then typically housing stuff. If you own current properties, you're going to need to provide the principal and interest, mortgage statements, breaking down those the monthly payments on that. So those are some of the items that you can kind of start to gather, and you'll be amazed on how much smoother your process is going to go if you can get that stuff done up front.
Yeah, definitely. And the last thing you want to do is be chasing people for documents all through the process.
Correct.
So the more you can have up front for the lender, the easier it is for you.
Absolutely.
The easier it is for everybody.
Well, and plus we can get stuff answered quicker, right?
Yeah,
so if we notice stuff as we're beginning of the process, instead of if you're not going to send in some of that stuff until 3 weeks in, that's 3 weeks. That could cost you the house, delay in closing, open up a whole lot of stuff. So,
yeah, definitely.
Yeah, great question here. So
Yep.
I got another question in here coming in. In a multiple offer scenario, what can I do as a buyer to make sure I get the offer accepted?
Yeah, so kind of reiterating what we talked about, having your docs in early helps because we want to make sure that pre-approval is bulletproof.
Correct.
If there's multiple offers on a property and the listing agent, if they're being diligent, they're going to call the loan officers and find out how many conditions are there on this, what do they need to do yet? And if it's not a great pre-approval, if they don't have a lot of those things, they're going to be questioning that pre-approval. So one thing is having a bulletproof pre-approval. The other is offering, as much as you're willing to pay for the property. So if it sells for $1 more, you're not going to have regrets because you don't know what the other offers are.
Yep.
So you have to make your best offer. Contingencies, that would be home inspection, different contingencies there. The less contingencies you can have, the better. Because again, a cash offer with no contingencies, no appraisal will be the best offer that somebody can make. Then beyond that is financing, how much are you putting down, what loan program, because as you know, big difference between FHA, conventional, in the conditions. Things like that. And then, it's kind of, some people find it silly, but if you can write a letter explaining your situation, why you want this house, if you try to build some rapport and connect with the seller, that might be the reason.
That's great. That's a really good point.
Take that.
I mean, think about it. If you're in a family-oriented neighborhood, right, and you have somebody, multiple offers on a house, and one wants to tear it down and, invest or do it as an investment property or sale or whatever it may be, flip it, or you have another family who's got small children and they just love the neighborhood and they want to get accustomed to that area because of that, and it's a perfect family home, that could win it.
Yeah.
Right? So that's a really good point.
And it's not our decision to make. It's the seller's decision.
It is.
What they want to do. And we just present it to them and then let them pick.
Yeah.
Let them pick from there. So
perfect.
All right, Joel, we have another question here. What is the difference between a conditional commitment letter and a clear commitment letter?
Great question. This one comes up every once in a while. If you do a good job of explaining the two, which I'm going to do right here, it makes it a lot easier. So the conditional commitment letter is typically, you're going to get this after the review of the initial review of the file.
Yep.
So you've gotten the majority of the upfront documentation submitted in. The file comes back. If it comes back conditionally approved, that's a positive. All right, but that doesn't mean you're done. Right?
No, not at all.
It just means that you've been approved initially, and now you have maybe hopefully minor conditions left, a few items, maybe an appraisal, title work, homeowner's insurance, any kind of miscellaneous things that couldn't get done up front.
Yep.
That's what could be left. And then it could also mean maybe you need to source a few more large deposits or explain maybe your income went up and down between years or whatever it may be. But that's what it is. That's probably the next best thing after a pre-approval is getting a conditional commitment letter.
Right.
And then your clear commitment letter, that means you're done. All right. Now you're set to go. You got your clear to close. There's nothing left. Maybe some funding docs, so that's post-closing kind of stuff.
Yeah.
So the big difference: conditional means you still have some items you need. Clear commitment, you're done. You can rest assured that you're going into closing.
We love those emails as they come in. So
those are typically the best.
Definitely.
All right, third question here for you. So wrapping up on the buyer questions for you. What's the difference between a short sale versus a foreclosure?
Okay, so a foreclosure is where somebody has not made their payments on the house. The bank forecloses on that property. They've had the sheriff's sale. We've run through the redemption period, which is typically 6 months if they're living in the house, and then the bank takes possession of the house. That's a foreclosure. They then go through the property preservation. They have the property cleaned out. And then they start marketing the house, and that's the bank doing that. So like, for instance, JP Morgan Chase, I list houses for them. They own the property. Now, a short sale is where the individual lives in the house. They may be 2 months, 6 months behind on payments, and they don't want their credit to be affected as bad as a foreclosure would. So then we list the house for sale, come up with a list price for it. And then the bank is going to have an appraisal done on the property, find out what they think it's worth. They'll have a couple other opinions of value, and then they say, we will accept X amount of dollars for this property. So there's more hoops to jump through because we have to have the bank approve the financials of the sale. They're going to ask for documentation. Why do you feel you can't make the payments on this house? Why don't you want to have a loan modification done to stay in here? But at the end of the day, the person selling short, it's going to save their credit some. They can buy a house earlier than if they were foreclosed on. And then, like I said, it's a longer process. So when they're selling short, it means they're taking less than what the person owes. It's a long process. It takes a lot of paperwork. So the big thing is you have a lot of investors looking for those foreclosures to buy. They're not as willing to wait for those short sales because they take a little bit longer to process. So if you're somebody who needs to buy a house soon, this is not going to be a good option for you. Now, if you're somebody who, let's say you're on a month-to-month lease, you might live with parents, you're able to buy a second house, a short sale is a good
saving up
is a good deal because it could take up to 6 months or a year to get that short sale done. But you don't have the competition you have on the foreclosures, so you can still get a really good deal on a property buying a short sale. So it's really important to go with somebody that knows the process, how this is done. Every bank is different. You can process a Wells Fargo short sale much faster than a JP Morgan Chase short sale. So it's also good to know what banks they are.
They got a short sale going on right now, and he's been trying to buy the house since December. He hasn't been in process that long, right? And typically we're looking on that one at about 30 days or less.
Really? Wow, so that's great.
I mean, but obviously he waited to kind of go through the mortgage process, but at the same time he prepared for it so that he's set to go. So.
Yeah, I've had them as fast as 3 months from offer to close, as long as a year and a half.
Yeah, it really depends on when they start the process on the lending side. But for the process beginning with the buyer doing the buy-in one, it takes a while.
It's unbelievable.
So,
okay, Joel, we have one last question here to wrap up the buyer show. I've given you everything but my blood sample. Why are you still asking for more documentation?
Yes, that's a great question, and I've actually been asked that a few times.
Yeah, I'm sure you have.
It really boils down to, again, what we've talked about in previous episodes, setting proper expectations with the customer, and also the customer being open.
Right.
Maybe, a lot of times, like, we're going to find out about it by looking at your credit, income, and assets if there's any issues going on. So you might as well just be upfront with us, just as we're going to be upfront with you, right?
Right.
And when we request documents, and we've talked about this off camera, if I request something, I'm not requesting it because it makes me feel good, right? And I'm requesting because we need it. And it's not necessarily my guideline, it's the investor's guideline, or if you're doing a portfolio loan, it's the bank's guidelines. I mean, there's multiple things that come into play.
Yeah.
We just don't want to just ask for additional stuff because it makes us feel good, because it definitely doesn't.
Yeah, you have other things you like to do for fun than collect documents.
Correct.
So just get them in as soon as you possibly can. Nobody wants delays, especially you buying a house.
Correct.
You don't want delays in the process.
No. Yeah, I mean, the sooner you get stuff in, the quicker we can look at stuff and then hopefully jump out in front of some of those potential issues. Granted, things pop up, and that's just the way it is. So we count on the agents and the buyers to provide us if there's anything going wrong. Let's say there's an addendum going on in the contract, stuff like that. We want to know about it so that it doesn't cause any problems later on. Instead, we get to closing, we find out that there's a seller repair credit, and now we have to delay closing because you just can't do that at the last minute.
Yeah, bad deal. I've seen it all.
So it happens.
Yeah, definitely. So next week, guys, we'll be joining you with seller questions that we've had submitted to us. So we'll answer those. And remember, if you guys can like, comment, share these videos on Facebook. If you're watching this on YouTube, giving it a like in the bottom left corner helps us tremendously. And any final parting words, Joel?
No, just keep the questions coming. We enjoyed it. It makes us be able to be a little bit more educational for you guys, and that's really what we're out here to do. So thanks again for tuning in, and enjoy the rest of your week.
Yeah, see you next week.